Hi everyone, welcome to Paper Master. Today we will discuss the section A of Management Accounting and Financial paper of AAT exam July 2020. This section consists of 4 questions and over 20 marks. So we will start with the question number 1. I will read the question for you. You can also see the question in the screen. Management accounting and financial accounting serve different purposes within an organization. While financial accounting provides information to internal and external stakeholders, management accounting provides mostly to internal stakeholders of the organization. You are required to state 2 advantages of management accounting for an organization. We'll answer to the part A first and move to part B later. So firstly we will look at what is meant by management accounting. It is the process of providing financial information and resources to managers to make short-term as well as long-term decisions. So there are a number of advantages of management accounting. First one is decision making. The main advantage of management accounting is to provide the information for decision making process. This information can be provided via charts, table, forecast, or it can be via analysis. Next one is planning. Financial and other information will provide to managers on a regular intervals. It may be like daily, weekly, or sometimes monthly. This information can be used by the managers in order to plan the activities of the organization. So we will move to part B of the question number 1. The following information has been extracted from the standard cost card of product W of ABC Limited. They have given the direct labor, material, overhead and selling price. The fixed overhead for a month is 185,360 and the production/sales for the month of September 2020 was 15,460 units. You are required to calculate the break-even points in unit, margin of safety in units. Part 1. Break-even point is calculated by dividing the fixed cost on contribution per unit. They have given the fixed cost in the question and we will have to calculate the contribution per unit. So the selling price is 62. We have to deduct the fixed cost in order to arrive the contribution. We will deduct the direct material, labor, variable overheads. The contribution is 14 per unit. We have the fixed cost and the contribution per unit. If you divide the fixed cost of 185,360 from 14, you will get the break-even point, that is 13,240 unit. That is a break-even point. So the part B, margin of safety in units. The actual sales is 15,460. The break-even unit is 13,240. So the difference between the actual sales and the break-even sales is 2,200 unit. That is margin of safety. That's the end of the question number 1. We will now move to question number 2. Right. Budgeting is considered as an important process by many organizations since it is carried out in order to meet multiple objectives of the organization. You are required to explain 2 objectives of budgetary process of an organization. There are 6 main objectives of budgetary process of an organization: planning, coordinating, communication, motivation, control, and performance evaluation. So the planning. Budget is a plan of the future. Managers can take the plan of the future based on the budgetary control system. Coordination. The budget allows a coordination of all part of the business towards a common goal. And the next one is communication. Budgeting process involve managers at every level of the organization. This is important to have a medium of communication between the upper, middle, as well as lower management. So you can read the motivation, control, and performance evaluation. We will now look at the part B. State 2 strategies that an organization can adopt when there is a situation of cash surplus. Right. What is our strategies if we have a cash in our organization? Believe me, many organizations doesn't have enough cash to run for their day-to-day operation or to expand the business. So if we have a cash surplus, we can either make short-term or long-term investments, or else we can negotiate with the creditors for early settlements, and thereby we can obtain the discounts, or perhaps we can use that cash to settle loans which we have taken at high interest rate. Right, that's the end of the question number 2. We will move to question number 3 now. The following information has been extracted from the financial statement of Trade Limited for the year ended 31st March 2019 and 31st March 2020. They have given the sales, cost of sales, closing inventory, and trade receivables. Trade payables settlement period for the year 2019-20 is 35 days. You are required to calculate the length of working capital cycle for the year 2019-20 of Trade Limited. How we are going to calculate the working capital cycle? Working capital cycle is calculated by adding the inventory turnover, debtors collection period, and deducting the creditors settlement period. Firstly, we will have to calculate the inventory turnover. Average inventory divided by the cost of sales are into 365. The answer is 73 days. Debtors collection period. Average debtors divided by the sales into 365. The answer is 25 days. So the creditor settlement period is given in the question, and the working capital cycle is 63 days. So the part B, state 2 strategies that Trade Limited can use to improve its trade payable settlement period. Right. We can obtain longer credit period from customers, suppliers, or we can maintain a good relationship with the suppliers. Further, we can negotiate early settlement discounts with the suppliers. These strategies will help to improve the trade payable settlement period. Right, question number 4. Gains Limited is considered an investment in a new project with an initial capital of 16.5 million. The following net cash inflows are expected from the project for next 5 years. They have given the cash inflows for next 5 years. You are required to calculate the payback period, state whether the reason the project should be accepted based on payback period. Right, we will firstly calculate the payback period. There will be outflow of 16.5 million in year 0, and there will be inflows from year 1 to 5. So the Cumulative net cash flows will be positive from year 4 onwards. Therefore, the payback period will be 3 years plus 5.5 months. Right. Part B. State with the reason whether the project should be accepted based on payback period. So the cash flows will be positive from year 3 onwards, and the project is for 5 years. So we can recommend that the project is feasible based on the payback period, since it's give a positive net cash flows during the project lifetime. So that's it. The part A. We will look at the part B and part C in a separate videos. If you are a student who is studying commerce for A levels or doing professional exams like AAT, Chartered, or ZIMA, this channel will be useful for you all. We will discuss the past paper questions. So please subscribe us. There will be many more videos to follow. Thank you. Have a great day.